If you receive Social Security, there's something important you need to know. Your monthly deposit may not disappear, your benefit amount may not be cut, but how and when the money hits your bank account could change, and many people haven't been told clearly. This isn't a rumor, it's not a scam, and it's not a collapse of Social Security. It's about new bank rules, new verification systems, and how government payments are processed today. Most seniors will not lose money, but some may experience delays, temporary holds, account verification requests, or unexpected payment interruptions. And if you don't understand why, it can be scary. So today, we're going to slow this down and explain it clearly. No panic, no technical language, just the facts. First, let's clear up one thing right away. Social Security itself is not changing how much it pays you because of bank rules. Your benefit amount is still based on your work history, your earnings record, and the program you're in. What's changing is how banks are required to handle incoming government deposits, and that's where confusion begins. Over the past year, banks across the U.S. have been given new compliance responsibilities. These rules are designed to prevent fraud, identity theft, and improper payments. That sounds reasonable, but the side effect is that government deposits, including Social Security, are being reviewed more closely, especially when something looks different than usual. Now let's talk about what banks actually see. When Social Security sends your payment, the bank doesn't just see money, they see the source, the account information, the payment code, and patterns over time. If everything looks normal, the deposit goes through, but if something changes, even something small, the bank may pause the deposit temporarily. This is where people start to worry. Now let's talk about what counts as a change. Some examples include switching banks, opening a new account, changing your name, adding or removing a joint account holder, moving to a new address, or changing how deposits are split. Any one of these can trigger additional verification. That does not mean you did something wrong. It means the bank is required to double check. Now here's something very important. These checks are being done by banks, not Social Security. Social Security sends the payment. The bank decides whether it needs to verify before releasing it. That distinction matters. Now let's talk about timing. Most people are used to their Social Security deposit arriving on the same day every month, so even a one-day delay feels alarming. But under new bank procedures, some deposits may be reviewed before being fully credited. This is especially true if the account is new, the deposit amount recently changed, or there's activity the bank isn't used to. Again, this is not a benefit cut, it's a processing step. But if no one explains it, it feels like something is wrong. Now let's pause for a moment. If you're listening to this and thinking, my deposits have been fine, that's good news. For many people, nothing will change. But for others, understanding this before it happens can save a lot of stress. Because when a deposit is delayed and no one explains why, people assume the worst. Now let's talk about another piece of this. Banks are now required to be more careful with government payment reversals. In the past, mistakes were often corrected quietly. Now banks must document more steps. This can slow things down. Again, it's not personal, it's procedural. Now let's move to something many people don't realize. If Social Security ever needs to reclaim a payment, for example, due to an overpayment, banks now handle those requests differently. That can affect account balances temporarily. This doesn't happen often, but when it does, it causes confusion. Now here's the key takeaway so far. Social Security deposits themselves are not being eliminated, but the banking layer between Social Security and your account has become more strict. And stricter rules mean more verification. In the next part, we're going to talk about who is most likely to be affected, what specific bank rules are causing delays, and how to reduce the chances of problems with your deposits. Now let's talk about who is most likely to notice these deposit changes, because this does not affect everyone the same way. Some people will never notice anything different at all. Others may notice small issues that feel big if they're unexpected. The people most likely to see changes are those who recently made updates. For example, if you changed banks recently, or if you opened a brand new account. Banks treat new accounts differently than long-established ones. There are more checks, more verification, more caution. Another group includes people who added or removed someone from their account. This could be a spouse, a family member, or a caregiver. Even though this feels routine, banks see it as a change in ownership or access. That alone can trigger a review of incoming government deposits. Another common situation is moving. If you changed your address recently, even if your Social Security record is correct, your bank may still flag the account. This is because banks compare address information across systems. When something doesn't match perfectly, they pause and verify. Again, this is not punishment, it's compliance. Now let's talk about something that surprises many people. If your monthly Social Security amount changed recently, even by a small amount, that can trigger extra checks. This could happen because of a cost of living adjustment, a Medicare premium change, or a withholding adjustment. Even though Social Security expects these changes, banks sometimes treat them as unexpected activity, so they verify before releasing the funds. Now imagine how this feels from the outside. You check your account. The money isn't there yet. No message, no warning. That's why this causes anxiety. Now let's talk about how long these delays usually last. In most cases, delays are short, often just 1 business day, sometimes 2, rarely longer unless the bank needs information from you. But here's the important part. If the bank needs something, they usually don't cancel the deposit, they hold it. That means the money is still yours. It's just waiting for verification. Now let's talk about what banks may ask for. They might ask you to confirm your identity, your address, or that you recognize the deposit. Sometimes it's as simple as a phone call. Other times it's an in-branch visit. It depends on the bank. Now let's address a big fear people have. Some worry that banks can reject Social Security payments permanently. That's not how this works. Banks are not allowed to deny government benefits without reason. They can delay for verification. They can request confirmation, but they don't get to keep your money. Now let's talk about direct deposit versus paper checks. Direct deposit is still the safest and fastest method. These bank rules do not mean direct deposit is risky. In fact, paper checks are more likely to be delayed or lost. So switching away from direct deposit usually creates more problems, not fewer. Now let's pause for a moment. If you've ever had a deposit delayed before, you know how stressful it feels, especially when that money pays for rent, utilities, groceries, medication. That's why understanding this matters, not to scare you, but to prepare you. Now let's talk about what you can do to reduce the chances of delays. The first thing is consistency. Banks like stability. If your account stays the same, deposits flow smoothly. The second thing is communication. If you know you're making a change, expect possible verification. That way, it doesn't feel like a surprise. The third thing is keeping your information up to date, both with Social Security and with your bank. Mismatched information is one of the biggest triggers for delays. Now let's keep going, because there's another important angle to this that most people don't realize, and it has to do with fraud prevention and why these rules exist in the first place. Now let's talk about why these bank rules exist in the first place, because understanding the reason behind them makes everything feel less threatening. Over the past several years, there has been a sharp increase in financial fraud, not just online scams, but fraud involving stolen identities, fake accounts, and diverted government payments. Criminals learned that government deposits are predictable. They know when payments arrive. They know the amounts. So banks were told to slow things down just enough to make fraud harder. That's where these new rules come in. Banks are now required to take a closer look when something doesn't match their records. That could be a new account, a recent change, or an unusual deposit pattern. Again, this is not aimed at seniors, it's aimed at criminals. But unfortunately, when systems tighten, regular people sometimes feel the effects. Now let's talk about one specific situation that catches many people off guard: joint accounts. Many retirees add a trusted person to their account for help. A spouse, an adult child, a caregiver, that makes sense. But when a government deposit enters a joint account, banks sometimes treat it differently. They may need to confirm that the primary recipient still controls the account. This is especially true if the added person is younger or newly added. Again, nothing is wrong. It's just another verification step. Now let's talk about prepaid cards and online banks. Some people receive Social Security on prepaid debit cards or through online-only banks. These institutions sometimes have stricter automated systems. That means fewer humans reviewing cases. So when something is flagged, it may take longer to resolve. This doesn't mean these options are bad, but it does mean communication is important. If you use one of these services, it's a good idea to know how to reach customer support quickly. Now let's talk about something else people worry about: Some fear that banks are sharing personal information with the government. Here's the reality. Banks already operate under strict reporting laws. These new rules do not suddenly give banks new powers to spy on you. They focus on verifying transactions, not monitoring lifestyles. The goal is accuracy, not control. Now let's bring this back to your deposit. What should you do if your Social Security payment doesn't arrive when expected? The first step is to wait one business day. Many issues resolve quickly. The second step is to check messages from your bank. Often they send alerts or notices. The third step is to contact your bank directly. In most cases, the bank, not Social Security, is the one holding the payment. Calling Social Security first often leads to frustration because they already sent the money. Now let's talk about something important. Do not ignore bank messages, even if they look routine. If a bank asks you to confirm something and you don't respond, the delay can last longer. Quick responses usually lead to quick resolutions. Now let's pause for a moment. Everything we've talked about so far points to one key idea. These changes are about process, not punishment. They are about verification, not denial. They are about security, not control. Understanding that makes all the difference. Now, there's one more angle we need to cover before wrapping this up. It's about rumors. Specifically, the rumor that Social Security deposits will stop or move to a new system because of these bank rules. That rumor is false. There is no plan to stop deposits. There is no plan to force people into new accounts. There is no deadline you must meet. The system is still the same. It's just being handled more carefully on the banking side. Now let's slow everything down one last time. If you receive Social Security and your account has been stable, you may never notice anything different. If you do notice a delay, it's likely temporary. If the bank needs something, they will tell you. And once verified, payments usually return to normal. This is about staying informed, not staying afraid. Understanding these changes gives you confidence, and confidence is what protects you from panic when something small feels big. I'll continue explaining a few final practical tips that can help you avoid issues altogether. Just stay with me. One of the simplest ways to avoid problems is to keep your banking setup as steady as possible. That means avoiding frequent changes unless they are truly necessary. If you do need to change banks, it's best to do it early in the month, not right before a payment is due. That gives systems time to adjust. Another helpful step is to make sure your name matches exactly across all records. Even small differences can cause delays. Middle initials, hyphens, suffixes like junior or senior. Banks compare this information very closely now. Next, make sure your contact information is current. If a bank needs to verify something and can't reach you, the delay lasts longer. A working phone number and email can make a big difference. It's also a good idea to log into your bank account regularly. Look for alerts, read messages. Many delays are resolved quickly when people respond promptly. Now let's talk about something that helps peace of mind. Having a small emergency cushion, even a little, can reduce stress if a deposit is delayed by a day or two. That's not always possible, but when it is, it helps. It allows you to stay calm and handle verification without panic. Another helpful habit is knowing your payment schedule. Social Security payments follow a predictable calendar. If you know your usual deposit day, you'll notice quickly if something is off. That doesn't mean something is wrong. It just means it's time to check. Now let's address one final concern. Some people worry these bank rules are just the beginning. They fear more restrictions are coming. There is no indication of that. What we're seeing is banks adjusting to modern fraud risks, not a change in the Social Security program itself. Your benefits are still protected by law. Your payments are still owed to you. Your access to your money is not being taken away. These are procedural adjustments, not policy cuts. So let's bring everything together. Social Security deposits are not ending. Benefit amounts are not being reduced because of bank rules. What's changing is how banks verify deposits when something looks different. For most people, nothing will change. For some, there may be a brief delay, but delays are usually temporary and fixable. The most important thing is understanding what's happening. When you understand the process, fear loses its grip. You don't assume the worst. You take simple steps, and things move forward. If this information helped you feel more prepared, that's the goal. Staying informed is the best protection you have. Thanks for listening, and I'll see you next time.